The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com, that's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can be reached at 631-647-4694. You can always go on my website, themainstreetcode.com, and you can see YouTube videos of past shows, or you can visit me on Apple Podcasts if you happen to miss my show, or Spotify. And we're here every Friday at 3 o'clock, and we like to talk about our code. Our code is choice, organization, direction, and education. And we are an independent wholesaler, and we work with clients and several of your financial advisors, whether they be financial advisors, insurance experts, attorneys, accountants. They come to us for advice on areas of life insurance, annuities, disability, long-term care. All these fixed insurance products is where we specialize. And for past several weeks, you know, what's hot in the news is inflation, and the price of this, the price of that, everything's going up, and interest rates have gone up, and Social Security in January is going up by 8.7%, which is, holy cow, that's fantastic. And the market is turbulent. And the market is turbulent because the interest rates are so high, and people are pulling money out of the market, and they're either hiding it under their mattress, or the big money is going into fixed investments like fixed annuities. And I've been talking about fixed annuities for several weeks now because the interest rates keep coming up. But the interest rates don't 100% correlate with inflation. They don't correlate completely with inflation. People say, oh, inflation's way up, so interest rates must be way up. And what I found happened is, and you know, we're giving annuities, whether it's your regular money or your IRA money or 401k roll, we're up near 5% right now. But we don't know how long that's going to be. And what I'm finding is people are sitting on the sidelines saying, oh, it's going up. Well, next month I'll buy. And guess what? All of a sudden, it's not there anymore. And that's the reality of what's going on right now. And as a matter of fact, the way annuities are priced, and when they offer an interest rate, the insurance company which offers these products buy 10-year treasuries, 5-year treasuries, 3-year treasuries, 2-year treasuries. So they're buying a rate. They have to back 100% of your money, actually 108 cents for every dollar you put in an annuity. Are annuities safe? Fixed annuities are the safest investment around because they have to reserve $1.08 for every dollar they have to put in reserves to make sure they can pay you your money back, or your money back with growth. They have to keep that in reserve, and they have to buy treasuries. And they have to buy aggressive treasuries in bulk. And what many people don't realize is the 5-year treasury, the 3-year treasury, which was way up. Well, the 5-year, I think, was at 465. That dropped to 415 in 1 week. Nobody was looking. Okay? So what happened is, on Monday, today's Friday, on Monday, one major insurance company already is dropping their rates. by 40 basis points. Or, they were paying 4.75, now they're going to pay 4.4 or 35 basis points, whatever that equates to. That's a huge drop in a week when they were expected to go up. Well, the Fed's going to raise the rates again, but why are the rates going down? I wanted to explain that because so many people sit and wait and think that everything's going up or everything's going down or the market's doing this. And what they don't realize is the time to act is now. You have a great, great opportunity to take advantage of these high annuity rates that I haven't seen in over 35 years. I've been in this business close to 35 years. I haven't seen rates like this. It's going crazy. It's going bonkers. But it's coming to an end, people. The other thing I need to explain about these annuities is people don't understand why if they're buying 5 and 6 years, they're getting a lower rate than if they buy 3 or 4 years or 7 and 8 and 9 years. The rates offered are actually a lock-in rate that's lower. You would think it would be higher. Intellectually, you think, well, I'm putting more money in or I'm holding on to it longer or I'm doing this. I should get a higher rate of return. And typically you would. But the long-term rates are lower than the short-term rates, which is what they call an inverted yield curve. It's a very weird phenomenon. But what that's also saying is, if you're only buying 3 years or 4 years, at the end of those 3 or 4 years, even though you're taking advantage of this great rate right now, where are you going to be 4 years from now? Because all the big money is saying it's not going to be this high. This is a temporary fix to an inflationary environment that you have the opportunity of taking advantage of. I don't know when it's going to end, but they predict it's going to end. All the big money, including the treasury, including insurance companies, are saying it's going to end. Take advantage now and get off the sidelines. Now, if you're on the sidelines because you're worried about the market, well, take advantage of this high rate that you can lock in before going, not everything, but some of your money should be invested in some fixed assets that you know are going to be there and that can help you combat this inflationary environment we're in. Yes, Social Security is going to help many people that are retired. At 8.7 Gunch is going to help a lot of people. But with any other money and savings, that all has to work for you. Your money has to work for you so it will last. Listen, there's good times, there's bad times, there's high interest rate, there's low interest rate, the market's up, the market's down. If you can lock in some great rate right now, now's the time to do it. Now, people don't understand that they may have a 401k at work. And I can't tell you how many people, year after year after year, they leave their work, they retire, and they leave the 401k with their former company. Let me tell you why that's a problem. They only have a certain amount of investments in their 401k. They control the investments, not you. So what do? You can have the availability of converting that 401k into your own IRA. It doesn't cost you anything to do it. It's a tax-free exchange. Yes, that money's taxable when you start using it, but you can take that money and put it into your own IRA. You can put it into things like regular investments, stocks, mutual funds. You can put it into annuities, whether they be fixed annuities or index annuities or this and that. And what we're finding lately is not just the fixed annuity rates are up, but we have these index annuities that are unbelievable products. And people are buying this like crazy. Because what they're doing, a lot of people will buy what they call an immediate annuity, which is like a pension, which will pay you an income for life. But now they have riders inside their annuities. Like on an index annuity, we have it on a fixed annuity. But the index one says, okay, I still believe in the market, but I don't want to take risk. So what you do is you put your money into a bucket of money that can grow as high as, I'd say right now, 10.25%. They have some that are registered. They have non-registered. I'm talking about what we call non-registered, non-security product, a fixed product, which allows you to participate in the market up to 10.25%. So if the market does 10.25%, you get it. The market does 20%, you get 10.25%. Market does 5%, you get 5%. What if the market goes down? You still get over 2%. That's 2.3% right now. So even if the market goes down, I'm still going to make money. How many investments are you involved in where you're guaranteed to make money and potentially make more money if the stock market goes up? Unbelievable. And as an added bonus, they have a rider that can guarantee you an income for life while you're still invested in that annuity. And we're going to talk a little bit more about that right after we get back from break. You're listening to the Main Street Code for Financial Success. Give me a call, Neil Himmelstein, 631-647-4694. We'll be right back. Welcome back, everybody. If you're just joining me, we were talking about these crazy, great index annuities that are out there right now on a fixed bucket. First off, I want to go into great detail what people are doing with their IRAs right now. They're taking their IRAs, they're taking their 401ks, and they're buying these index products, which have a cap of, let's say, 10.25%. So they're still partaking in the market, but they have downside protection of like over 2% right now. So no matter what the market does, you're going to get anywhere from 2 to 10%. And what's even more brilliant about this product, it's only one product in New York that does this. It's so brilliant on this chassis, is they'll also give you an income rider, which says, I can get, let's say, 5, 6, 7%, depending on your age. The older you are, the higher you can get. And I'll guarantee you that percent of your money as an income. Think of your IRA and your retirement and having this income stream, yet not giving up your asset like if you were to buy like a pension where it goes away. This never goes away. And what we're seeing is, even with older people, that they're getting 6 and 7 and 8% income, and that asset still doesn't go away because it's participating in an index. So the money is still there, yet they get to live on this income for as long as they live. Now, what's the downside? I always like to talk about downside. If we have a protracted down market, year after year after year after year, they're still going to earn 2.3% minimum on that money. That's not so bad. Okay, the market's hammered. Everything else is down. Oh my God, the world's coming to an end. They're still growing. Now, if we have a good market, they can get up as much as 10% every year and still be taking out that 6% income. They're going to leave more money than they've taken out behind, yet still have a comfortable income to live off that IRA money. So we're seeing tons of people move into this arena right now. And you need to talk to me. These rates don't stay forever. As I said before the break, things change. We all know things change. Look at what's happening in the world. It's changing constantly. But today you can take advantage of the change. Don't be sitting there with the covers over your head saying, oh my God, I got to pay, $23 for a turkey. Last year I paid $22 for a turkey. No, you could do something about this. You can do something about it now. Don't wait. The interest rates may go down. The inflation may still be there, but the rates that you could buy stuff at with your own money is at an extremely high non-risk scenario today, like never, ever before. This is where the smart money is going. So don't be one of those people that are sitting on the sidelines. Oh, it's going to get better tomorrow. And then go, oh, shoot, I didn't do anything. Oh, shoot, I procrastinated. Procrastination. Okay? Or, the market's going to go great. I'm going to risk all my money. And all of a sudden, it's gone. Another thing that happened in the news in the last couple weeks, which was a big, big deal. that people aren't talking about because of the midterm elections and everything else was this FTX exchange going down. And not a lot of people are talking about it, but there was a lot of young people out there that you may know, and older people that have put their life savings into Bitcoin, into this exchange, which was fraudulent. That's scary stuff. You want to make sure. I'm not saying Bitcoin or any of these great, if you don't understand it, be very wary. It only should be a portion of your money. You should never put all your eggs in one basket, especially something that is you don't know about. It's great to follow the craze, but I hate to see people crash. And the older you are, the harder it is to get up after a crash. When you're young, you can get up after a crash. It happens. And many people have. I have. I'm sure lots of other people have. The strongest people have gotten up from crashes. But the older you are, the harder it is to come back. So this is why these fixed annuities and fixed things are so important. On another note, this month was National Long-Term Care Awareness Month, and it was also Alzheimer's Awareness Month, which both work hand in hand. Long-term care, for those who don't know what long-term care is the inability to perform 2 out of 6 activities of daily living. 2 out of 6 activities of daily living is the definition of long-term care. So when you're older, even if you're younger, if you get some weird disease or Parkinson's or something, that you could be impaired to where you can't perform 2 out of 6, and that's called long-term care. For people over the age of 65, 70% of us will need assistance other than what your health insurance is going to pay or anybody else is going to pay. We're going to need assistance with our activities of daily living. So with that, we need to prepare for long-term care. Now, I just read the latest statistics. Nobody wants to go to the nursing home. That's the bad house. We all know that's the bad house. Nobody wants to go. Oh, I'll kill myself first. We get it. But the average cost, Long Island is the most expensive place of all of the state of New York. The average cost of a semi-private room is $455 a day is the average cost. Not even saying I'm going to a good nursing home or this and that. At $455 a day, everybody say, oh, the annual is blah, blah, blah. Okay, just think about that as every day paying $445. After a week, it's like almost $3,000 a week. $3,000 a week to be in a place that you don't even want to be. It's horrendous. So we have that possibility, or we have to rely on our family and friends to take care of us. And our family and friends may not be able to take care of us. They may have to quit their job to take care of us, or impact their life to take care of us, which can impact your children's lives, your grandchildren's lives. All of a sudden, the whole family is not working, not making money, because somebody needs help at the home, and maybe that person can't work and the other people can't work. So all of a sudden, there's a big financial drain. It's a big emotional drain. Anybody knows that's had money troubles. It certainly affects your mind. Certainly stressful, which leads to further problems. So how do we stop that? We can't prevent that. We can help protect you with some sort of long-term care insurance. And that's what it's there for. 18% of the entire country has some sort of long-term care coverage, whether it's through a life insurance policy, whether it's in it. 18%. 70% of us are going to need it. And like I always say, the other 30% of us are going to be taking care of the 70% of it. So 100% of you need to protect yourself somehow. Now, there are legal ways to protect yourself. There are insurance ways to help protect yourself, but you need to develop a plan, and you need to sit with somebody like myself who's going to analyze your situation and your family's situation and develop a plan. Part of it could be legal. Maybe you're going on Medicaid. We have a lot of great estate attorneys in this station that talk about Medicaid planning. Well, Medicaid planning is really impoverishing yourself so that you can go on the government plan so they can stick you in some nursing home somewhere where you may not want to be, or you don't want your family to be. They could be, 40 miles away from your house. Then how do you visit them every day? Or what kind of care will they give you in your home? It'll come at your expense. You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. Let's hope and pray for a great, great weekend and a terrific life. And happy Thanksgiving, everyone. Have a great day.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.